Hello, all my dearest students of Full English. I hope you all are doing good. I hope your studies for your upcoming exams are going on great. So here I come up with one more video for you all, which will be very much relevant for your exams of November 2024. Now it is going to be a short video, not a very long video of 4 to 5 hours. It will be a video of around 1 hour, around 60 minutes. But it will help you to fetch around 14 marks in the examination. And apart from 14 marks, your more than 100 concepts will be revised in this particular video. Now the point I'm trying to say is, which you would have come to know from the title and the thumbnail also, that we are targeting here the total income adjustments which are relevant for your first questions in the examination. So we all know that the first descriptive question in the examination is a question on total income, in which mainly PGBP is there, profits and gains from business and profession. And apart from that, many other heads of income are also covered in that, like capital gains, other sources, chapter 6 is also covered, set off carry forward is also covered, then new regimes are covered, that is 115 BAA, 115 BAB, and then tax rates are also covered in the very first question. So in this particular sheet of around 5 pages, I have tried to cover maximum adjustments that are possible in the first question. If you do all these adjustments, I think so, out of 10 adjustments, 9 adjustments, you will be able to do it very easily in the exams. Now, I have made a video on this for the Hindi students. So at the same time, I have always promised you all that whatever I will do for my Hindi students, simultaneously, I will also do for my full English students. You don't have to worry about it. Okay. So this video will settle your 14 marks. That is the first question. Apart from this, we have already settled the 30 marks MCQs by making a video for you all in full English with respect to ICAI's 34 MCQ case scenarios. So we have done that also. So that will settle the MCQ part. This will settle the first question. So 44 marks are settled now. What about the remaining 56 marks? For that, we already have 23 papers compilation, which we have already uploaded in full English again for you all. 23 papers compilation, which includes 7 RTPs and around 10 MTPs and around 6 exam papers. So all of them taking together, if you do this much, I think so that will be much more than enough for you all to clear your examination in November 24 with great marks. Okay. So follow these many things, minimum at least, apart from what you are doing at your end. Okay. So 23 papers compilation, 34 case scenario MCQs, and this file. This will achieve most of the objective which is required. Apart from this, I don't think so you're required to see any other video and waste your time. Okay. So if you see anything about that, that is always going to be a value addition, but that is not going to make any substantial value addition after these three things. So today we are going to do the discussion of all the adjustments that are there in this sheet. So I'll be explaining the treatment of each and everything. You can watch this video 2-3 times. If you watch this video 2-3 times, that is much more than enough. You'll be well versed with all the adjustments. Don't worry. Some humble request from my side to you all. Do share this video with all your friends who wants to learn direct tax in the best possible manner in full English. And second thing that I would like to say that this particular sheet, I will attach this sheet in the comment box. You can see the comment box. It will be pinned below and you can download this sheet from there. Okay. So now without wasting any further time, let us start with the discussion. The first adjustment is creditors waiving off an amount on settlement. So suppose if a creditor is waiving some amount, then that is a benefit for me. That is a perquisite for me. That is a remission or cessation of a trading liability. Suppose I am supposed to pay creditor 10 lakh rupees. Now the creditor is waiving off 2 lakh rupees. So that is a remission and cessation of a trading liability, and that is deemed income under section 41(1), and therefore I need to add that to the PGBP income. If it is already credited to the PGBP income, then I will not do anything. If it is not credited to the PGBP income, I have to add back to the PGBP income. Okay. So this is the first adjustment. Second one, employer contribution to provident fund, etc. Now, if there is an employer contribution to provident fund, I am supposed to pay that by due date of filing of return. Even if I pay employer contribution by due date of filing of return, it is allowed as deduction in the current year. But as far as employees contribution is considered, For that, there is a stricter time limit that you have to pay by 15th of the following month. Check it, please. So employer contribution is covered in 43B. You can pay by the due date of filing of return. Employee contribution is covered under 36 subsection 1 clause 5A. Here you have to pay by 15th of the following month. That's it. For March contribution, you have to pay by 15th of April. Even if you do 1 day delay, then you are not allowed as deduction. As you all might be knowing that employee's contribution is first considered as an income of the SSE. When I deduct the employee contribution, it is first considered as my income, and then if I pay by 15th of the following month, it is allowed as a deduction. Okay. Next adjustment, you need to always check the TDS implication for all payments. You need to always check whether the payee is a resident or non-resident. You need to always check that in case of non-resident, the income of the payee should be chargeable to tax in India. So in case of resident, you have to deduct the TDS by 31st March. You have to deduct by March, and you have to pay by due date of filing of return. In case of non-residents also, you have to deduct by March and pay by due date of filing of return. And if you do not deduct by March and if you deduct in April, then the expenditure is disallowed. So deduction has to be by March and the payment can be made till the due date of filing of return. It's okay. So if you fulfill these two conditions, you will get the deduction in the current year, or else you will get the deduction in subsequent years. Secondly, in case of resident, if you don't deduct on time, if you don't pay on time, then 30% expenditure will be disallowed. But in case of non-resident, if you don't deduct by March and if you don't pay by due date of filing of return, entire 100% will be disallowed. Further, I am again saying that in case of non-resident, you have to check one more thing, that the income of the non-resident is chargeable to tax in India. Then only deduct TDS, otherwise don't deduct TDS, especially under section 195. Okay. So these are the few things that you have to check when you check the compliances of TDS, because non-deduction of TDS on time, non-payment of TDS on time leads to disallowance of an expenditure. Okay. Next, sometimes the company does what? The company makes a provision for fair estimate of wages for the last 3 years for periodical wage revision. Now this is a very famous adjustment which comes in the exams many a times. Suppose the company is making a periodical wage revision after every 3 years. So after every 3 years, the company is doing an assessment of the employees and doing a wage revision. And in that, the company is making some provision for wage revision. So whether that is allowed as deduction, the answer is yes. It is allowed as deduction under section 37(1). Okay. Under 37(1), it is allowed as deduction. Don't worry. Next adjustment. Suppose if you have taken a loan for asset and the asset is not put to use. Okay. Then multiple implications can come. If you have taken a loan for an asset is not put to use. So till the time the asset is not put to use, till that time the interest will be capitalized. Till that time the interest will be what? Capitalized. And once the asset is put to use, then you can claim normal depreciation and also additional depreciation if the assessee is a manufacturer or power generating assessee. Okay. You need to check this compliance also. So, and once the asset is put to use, you can take what? The depreciation up to the date of use, and after the date of use, you can claim that expense as what? As a revenue expenditure, and you can claim deduction under 36(1)(3). Say for example, the asset was purchased on 1st of April. The loan was taken on 1st April, but the asset was put to use from 1st October. So till 30th September, whatever interest is there, you will capitalize to the cost of asset. Till 30th September, whatever interest is there, you will capitalize to the cost of asset. You will claim normal depreciation. If possible, claim additional depreciation. And from 1st October, you will claim what? A revenue expense of the interest. And you will also check whether the asset is put to use for more than 180 days or less than 180 days. Accordingly, your normal and additional depreciation will become full and half. You need to check all these compliances in one adjustments. Okay. Next one is a very famous section. Every question paper has this particular section, 80JJAA. So what is 80JJAA? It is about employing new persons. Now 80JJAA is applicable if you hire new employees. Now you need to check a lot of things over here. First of all, the emoluments of the employees up to 25,000 rupees. Condition number 1. Second, the emoluments, the employee participate in the recognized provident fund. Only those employees are covered under 80JJAA who participate in the recognized provident fund. Thirdly, the employee should be employed for minimum to 40 days in the previous year. Fourthly, if the assessee is engaged in manufacturing of apparel, leather or footwear business, if the assessee is engaged in any of the 3 business, then even 150 days employment is sufficient. So for these special businesses, 150 days is sufficient. For other businesses, 240 days is relevant. Okay. Okay. Now, you need to see one more thing. If your business is an existing business, then you should pay by 4 modes. Existing business, pay by 4 modes. New business, you can pay by cash also. In case of new business, even payment of cash is allowed. But when you make the payment in cash, in case of new business, you need to always check the provisions of 48(3). Because if you are paying more than 10,000 rupees to a person in a day, in case of new business, because cash is allowed, you would get the deduction under 80JJAA, but you will not get the deduction under 48(3) PGBP. So it is better that you always pay by account pay check, account pay draft, ECS, and other electronic mode. Okay. Now, another important thing is you need to also check the implication of this in 115BAA and BAB. Generally, if a domestic company follows 115BAA and BAB, they are not eligible for any Chapter 6A deduction. But there are some Chapter 6A deductions which are allowed under 115BAA and BAB. Like 80JJAA is allowed even in this new regime. Like 80M is allowed even in this new regime. And 80LA is allowed in 115BAA, in 115BAB, that is not allowed. So these 3 deductions are allowed here. Apart from that, no other Chapter 6A deductions are allowed in 115BAA BAB. Neither any payment link deductions are allowed, nor any profit link deductions are allowed. Be very careful. Nor even 10AA is allowed under 115BAA and BAB. So this is the implication. You need to check the limit of 25,000 rupees. You need to check employee participates in RPF. You need to check whether they are employed for 240 days. If they are apparel, leather or footwear business, then you need to check whether they are employed for 150 days at least, not 240 days. And you need to check in case of existing business, they have to pay by 4 modes. In case of new business, they can pay by what? They can pay by cash also. But you need to check the implication of 48(3) always. That if you are paying more than 10,000 to a person in a day, then you need to pay by 4 modes. Okay. Next one. If you purchase any license fee and know-how, and if you debit to PNL, then it is not allowed as a deduction because it is an intangible asset. So add back this, and then claim 25% depreciation. And also check if it is put to use for less than 180 days or more than 180 days. If it is put to use for less than 180 days, then you will claim 50% depreciation. If it is more than equal to 180 days, then you will take full 100% depreciation. Okay, 100% depreciation means full 25% depreciation. I hope it is clear to all of you. Next one is a very simple adjustment, nothing great as such. If you pay cash to road transporter, then the limit is 35,000 rupees. Generally, if you pay cash up to 10,000 rupees to a person in a day, it is allowed. But if you pay to road transporter, then it is allowed up to 35,000 rupees. I hope it is clear to all of you. Okay. Next one, municipal tax paid on house property let out. Generally, municipal tax paid on house property let out is allowed as deduction if it is paid by the assessee. But it is not allowed under 115BAA. It is not allowed under 115BAB. Yes, municipal tax paid on house property, it is allowed under the normal tax regime. It is also allowed under 115BAA, but it is not allowed under 115BAB. Remember, any income which is normally taxable under 115BAB, against that income, no deduction of any expense or allowance shall be allowed. In 115BAB, always remember, normal incomes will be taxable at 22% without deduction of any expense or allowance. So this income is a normal income. Municipal tax, house property income is not specially charged. It is normally charged under income tax law. So normally charged income will be taxed at 22% without deduction of any expense under 115BAB. What about 115BAA? In BAA, you will get the deduction of municipal tax. Don't worry. Okay. Next, if you give donation to 3512 Scientific Research Association or 3513 Statistical or Social Science Association or 3512A Indian company engaged in scientific research or 3522AA IIT or National Laboratory, it is allowed under new regime, or it is allowed under the normal regime, but it is not allowed under 115BAA and BAB. So all 4 donations of scientific research are disallowed under 115BAA and BAB. Okay. Next, whenever in the question FMV of 31st Jan 2018 is given, whenever in any part of the paper, entire paper, if you see FMV on 31st Jan 2018, then there is only one implication of that there is a grandfathering clause. You would have purchased some shares or units before 31st Jan 2018 and now you are selling it. So you have to take what the FMV of that on 31st Jan 2018 and you have to derive the cost of acquisition of the shares as follows. Actual cost compare with lower of the FMV on 31st Jan or selling price, whichever is lower, and then lower amount will be compared with actual cost, and then whichever is higher, that will become your cost of acquisition. and that share will be covered, that unit will be covered under section 112A, which is taxable at 10% in excess of 1 lakh rupees. How to compute the FMV on 31st Jan, that also I have mentioned here only. That is, in case of listed shares and listed units. For listed shares and listed units, you will take the highest price on 31st Jan. On 31st Jan 2018, whatever is the highest price of that share and unit, you will take that as the FMV. If on that day share is not traded, then you can take the value of 30 Jan. If on 30th Jan also it is not traded, 29 Jan, 28 Jan, 27 Jan, on whichever day it is traded, take the highest price of that day. In case of unlisted share, unlisted unit, for unlisted unit, you will take the NAV, net asset value, of 31st Jan. Okay. And in case of unlisted shares, you will take the cost of acquisition of that shares. For example, you bought the shares in 2005-6 for 100 rupees. Take the cost of that shares multiplied by 2017-18 indexation. 2017-18 indexation was 272, and divided by what? Divided by 2005-6 indexation. So on the date of transfer, your unlisted shares has become listed, but on 31st Jan 2018 it was unlisted. So you will convert the cost into what? FMV by this formula. Take the cost multiplied by 2017-18 indexation divided by 2005-6 indexation. I hope it is clear to all of you. Next adjustment, dividend received from foreign company. Dividend received from foreign company, domestic or foreign company. What will you do? You will reduce from PGBP and you will show under IFRS. It is as simple as that. Okay. Next, donation to political party or electoral trust. What will you do? It is allowed if paid by other than cash. If you pay in cash, it is not allowed, but it is only allowed under the normal regime. If you give donation to political party or electoral trust, or for that matter even ATG donation, same treatment. It is not allowed under 115 BAA and BAB. It is not allowed under 115 BAA and BAB. Donations will not be allowed to you. Okay. Next one, if you sell some asset to 100% subsidiary or 100% holding, provided the buyer, the recipient has to be what? The recipient has to be Indian company. So holding company sending to subsidiary, 100% subsidiary, the subsidiary has to be Indian. Subsidiary sending to holding, then holding has to be Indian. If there is 100% relationship, it is exempt under capital gains. And what treatment you have to do? It is exempt under capital gains. Okay, it is exempt under capital gains. So from PGBP you reduce that profit, and under capital gains you show that as an exempt under a note. You write a note for the same. But yes, if the recipient is a foreign company, if the company who is receiving is a foreign company, then it will be taxable. Okay, you need to be very careful. Next, if there is an LTCG or STCG on equity shares or even equity oriented mutual fund on which STT is paid, you will tax that at 10% under 112A. If it is long term with 1 lakh rupees exemption, and if the same equity shares or equity oriented mutual fund on which STT is paid, it is short term, then it will be taxed at 15%. 15% under which section? Under 111A. Okay. Next one, salary paid to technician for installation of machinery. Now be very careful. If you pay some salary to technician for installation of machinery, and if you debit that salary to PNL, first of all add back that salary. Add back, that is not allowed as a revenue expenditure. Add back that salary and add that to the machinery, because it is a part of the cost of asset. It is a part of actual cost, and then claim normal depreciation on that, and also additional depreciation. You can check the implication of additional depreciation also if the assessee is a manufacturer or power generation. Further, remember one thing: to claim depreciation on this technician salary, you do not have to deduct TDS. TDS is to be deducted on revenue expenditure, not on capital expenditure. Even if you have not deducted TDS, you will still be eligible to claim depreciation on that. So this is a very important point which is mentioned here. Okay. You don't have to check the implication of depreciation. Even without checking the implication of depreciation, you will get the deduction of the depreciation. Sorry, even without checking the implication of what? TDS, you will get the deduction of depreciation. You don't have to check the implication of what of you. Okay. Now, next one is a very, very intelligent adjustment which I will help you to explain with the help of a small PNL. There is a small PNL here. Okay. So we have made a goods which are sold for 22 lakh rupees. Okay. We have sold goods of 22 lakh rupees. And this is a balance sheet. This is balance sheet, and here there is a debtors of 22 lakh rupees. Okay. Now, after some years, what happened? After some years, out of this 22 lakh rupees, 12 lakhs has become bad debts. So if 12 lakh has become bad debts, then this will become 10 lakhs. Now, how much is receivable? Receivable is only 10 lakh rupees. Now, suddenly you received 11 lakh rupees and you credited that entirely to PNL. So you received 11 lakh and you credited that to PNL. Okay. Now, how much you are supposed to receive? Only 10 lakh rupees. But you receive 1 lakh extra. Now, why the hell you have credited entire 11 lakh to the P&L? There is no need. This 11 lakh rupees, out of this 11 lakh, 10 lakh is already credited to the P&L in the form of sales, yes or no? You are receiving the money out of this only. Now, what is the extra amount that you are receiving? You were supposed to receive 10 lakhs. You received 11 lakhs. What is the extra amount that you are supposed to tax? Only 1 lakh rupees. You cannot credit entire 11 lakh to the P&L because out of 11 lakh, 10 lakh is already credited in the 22 lakh rupees. You have already paid tax on 10 lakh rupees. Therefore, reduce 10 lakhs from the net profit. Only 10 lakhs. Reduce 10 lakh from the net profit and let 1 lakh be part of what? 1 lakh be part of the P&L. Okay. So again, I am saying 22 lakh sales you have done, 12 lakhs bad debt. So how much you are supposed to receive? 10 lakhs. Now, if you receive 11 lakhs, then the 10 lakh rupees is out of this only. Now, why you have to credit that again to P&L? Only 1 lakh has to be credited. Therefore, if you have credited mistakenly 11 lakh rupees, reduce 10 lakhs and let 1 lakh be part of P&L, pay tax on that. I hope it is clear to all of you. Okay. Next one. Next one is also very important adjustment. Distribution of dividend by domestic company 1 month before the due date of return. Suppose if I am a domestic company and if I receive dividend from a domestic company or a foreign company or business trust, then I will compare that dividend received with dividend paid to my shareholder. When should I pay the dividend to the shareholder? You should pay the dividend to the shareholder 1 month prior to the due date of filing of return. If the due date of filing of return of the domestic company is 31st October, I have to pay the dividend till 30th September. If the due date of filing of return is 30th November, then I have to pay by 31st of October. So whatever dividend received, compare with dividend paid 1 month prior to the due date of filing of return, whichever is lower, will be allowed as deduction under ATM. Where it is allowed? Under ATM. Okay. And GTI, how much will be the deduction will be allowed? Whatever is the dividend received, compare with dividend paid 1 month prior to the due date of filing of return will be allowed. And one more thing, one good news is this deduction is also allowed in 115BAA. Just write down here, and 115BAB. This is allowed in 115BAA and BAB, as I have told you earlier also. This is one of the deduction which is allowed under 115BAA and BAB also. I hope it is clear to all of you. Okay. Next one, if there is an outstanding interest in your balance sheet and you are converting that into a new loan, whether that will be allowed as deduction. So if you convert your outstanding interest into a new loan or debenture, it is not allowed as per 43B. Conversion of outstanding interest into a new loan or debenture or any other security, it is not allowed as a deduction on conversion. But yes, when you actually pay, it will be allowed as deduction. I hope it is clear to all of you. Next one is a very simple adjustment. Income tax along with surcharge and cess is your personal tax, and therefore that is disallowed under section 40 clause A subclause 2. So income tax is disallowed under section 40A2. Okay. Next one, if you make any provision for payment of gratuity as per actuary, if you make any provision for payment of gratuity as per actuary, then it is disallowed. Provision for payment of gratuity as per actuary is disallowed under 40A7. So I made a provision of 5 lakh rupees as per actuary, that 5 lakhs will be disallowed. Provision is not allowed. But when you actually pay it, it will be allowed as deduction on payment basis. Okay. So provision will not be allowed. Actual payment will be allowed as deduction. Okay. Next one. Now, next one, I would like to link with some other point which I have mentioned later in the 3rd or 4th page. Expense on foreign travel of directors for opening new branch. It is allowed. So if we are opening some new branch outside India, for that directors are going out of India, because the business is expanding, for that we are incurring the expenses on travel of the director, it is allowed. But if we are incurring some expenses on director's travel, listen carefully. If you are incurring some expense on foreign travels of directors for a new project which is abandoned, the project is not fruitful, therefore we have to abandon the project. If we are incurring some expenses on travel of director in such circumstance where the business is abandoned, the project is abandoned, then it is not allowed. So if you incur the expense on travel of foreign director for what? For the purpose of, say, opening a new branch, then it is allowed. But for abandoned project, if the directors travel, then it is not allowed. Okay. Be very careful. For abandoned project, it is not allowed. Next one. Whenever you make any payment for online advertisement, you need to be very careful. The moment online advertisement come in your paper, there can be an implication of equalization levy. You need to check a lot of things. First, whether the other person to whom you are paying, whether he is non-resident. Second, whether he does not have a P. Third, if you are making a payment of more than 1 lakh rupees to him, that's it. Then the equalization levy has to be deducted at the rate of 6%. and you have to pay by 7th of the following month. If you don't do that, then your 100% advertisement expenditure will be disallowed. So you need to check the following compliance: whether the other person is non-resident, whether the other person does not have a PE in India, and the payment which you are making is in the form of what? An online advertisement, and the payment is more than what? It is more than 1 lakh rupees. Then you need to check the implication of what? Implication of equalization levy. Otherwise, if you don't deduct the equalization levy at the 6%, or if you don't pay the equalization levy by 7th of the following month, you are under default. Your expenditure 100% will be disallowed. But is it a permanent disallowance? No. If in the next year, if you deduct and pay, it will be allowed as deduction in the next year. Don't worry. Okay. Next one. If you do any expense or corporate social responsibility, it is not allowed under 37(1). It is disallowed. Okay. Corporate social responsibility is disallowed under 37(1). Next one. Employer making contribution to approved pension fund. Where? Approved pension fund. So it is allowed as deduction to the employer, but be very careful. It is only allowed to the extent of 10% of the salary. If you give more than 10%, it will be restricted to 10%. It will not be more than 10%, and salary for this purpose includes basic salary and DA in terms. So whatever is the basic of the employee and DA in terms of the employee, up to 10% of that will be allowed to employer. More than 10% will be disallowed. Okay, so you have to make that computation in the examination. Next, electricity charges are not covered in 43B. Electricity charges are allowed on accrual basis. Always remember, electricity charges are not tax, duty, cess or fee. It is not a statutory due. It is allowed on payment basis, not on accrual basis. Okay. Next one. Loss due to hedging contract against future price fluctuation on import of raw material. So if you are importing some raw material is a revenue item, and you have done some hedging against that, and if there is a loss, it's a revenue loss, it will be allowed as deduction. Don't worry, because raw material is a revenue item, and against revenue item, if you have done some hedging and if there is a loss, that will be allowed as deduction under the income tax law. But if you have imported a fixed asset like machinery, and if you have done hedging on that, and due to foreign currency there is a loss or gain on payment. Listen carefully. I am importing an asset. Condition number 1, importing plant, machinery, furniture. Condition number 2, I have taken a foreign currency loan, or I have taken the machinery on foreign credit, and there is a gain or loss on payment, not on 31st March. If there is a gain or loss on payment, then whatever gain or loss will be adjusted in the WDV of the block of asset as per section 43A. Where it will be adjusted? It will be adjusted in the WDV of the block of asset as per section 43A. Check please. And then you need to check the implication of normal depreciation and additional depreciation, if any. And also if the asset is put to use for more than or less than 180 days. But you need to check only on payment, not on accrual basis. Okay, as per 43A. Next one, amount received for non-compete fees. If you receive any amount for non-compete fees for any business and profession, it will be chargeable as a PGBP income. Be very careful. Okay, it is a PGBP income. I hope it is clear to all of you. Okay, next one, if you are transferring your capital asset and in the process the capital asset did not get transferred, so you have forfeited some advance. Okay, so what is the treatment of that? For that you need to check the date on which it is forfeited. If it is forfeited till 31st March 2014, then the treatment is different, and if it is forfeited from 1st April 2014, then the treatment is different. If it is forfeited till 31st March 2014, then the treatment is you will reduce this from the cost of acquisition whenever you will sell the asset. At that time you will reduce on the cost of acquisition. But if you forfeit on or after from 1st April 2014, then it will be considered as income from other source directly. It will be considered as an IFOS. I hope it is clear to all of you. It will not be reduced from in future. It will be taxable under IFOS in the year in which you forfeit. Okay. Next, whenever you sell an unlisted shares, you will always take indexation. For residents, for non-residents, indexation is not allowed on unlisted shares, and 20% tax will be charged for residents. For non-resident, it is chargeable at 10% without indexation and without first proviso to 48. Okay. For residents, you will take indexation also. You will take that 20% tax in case of long term, and in case of short term, normal rates. For non-residents also, I will tell you, it is not mentioned here, but I will tell you. For non-residents, you will take without indexation for long term, and you will tax at 10%. Okay, without first proviso to 48. Next, if the opening stock is overvalued, if you overvalue your opening stock, then you have to add back the overvalued amount. And if you undervalue the opening stock, then you have to reduce the opening stock, reduce from PGBP. At the same time, if your closing stock is overvalued, then you have to reduce the income, correct? Because if the closing stock is overvalued, then profit is overvalued, then you have to reduce your income. And if the closing stock is undervalued, then you have to add the income, because if the closing stock is undervalued, your profit is undervalued, therefore you need to increase the profit. Is it clear? I hope it is clear. Okay, every kind of adjustments are covered here, every kind of that, everything that is possible, and what came to my mind I have put over here, and some things which I have not put over here I am saying also, so you can mention it over there. Okay, you can note down somewhere, but most of the things, 99% of the things I have mentioned over here. Suppose last year company has done one mistake by including the interest in the opening and the closing stock last year, but in the current year they have rectified that. This is the adjustment, lot of time it comes in the examination. And in the last year the company had made a mistake of including interest in the opening stock and closing stock, but in the current year the company has rectified all the mistake. So if in the current year the company has rectified all the mistake, then you don't have to give any effect in PGBP, because the company has done all the rectification. Now then why you have to why you have to give any effect in that? Always remember that as per ICDS and even as per the accounting standard, interest shall not form part of the stock. ICDS also says the same thing, accounting standard also says the same thing, that interest shall not form part of the cost. So last year you included interest in the opening and closing stock, in the current year you rectified it. So if you have already rectified, you don't have to give any effect in PGBP. Next, if a cash is lost by fire or theft, etc., then it is allowed as a revenue loss. Don't worry about it. Okay, it will be allowed as what? As a revenue loss to you. You don't have to worry about it. Next, if TDS is not deducted or not paid by assessee, I have not deducted TDS, I have not paid the TDS. Okay, so I made a mistake. But the tax is paid by the payee, condition number 1, and it is included in the income of the ROI income. It is included in the income. It is included as an income in the ROI, in the return of income, condition number 2, and the return is furnished by the payee. So I failed to deduct the TDS, I failed to pay the TDS, but you have included that in the income, you have paid the tax, you have filed the return. Then do you remember that? Then the deductor will not be called as assessee in default. And in such case, it is deemed that the deductor has deducted and paid the tax on the date on which the payee has filed the return. So if I have not deducted, if I have not paid, but you have fulfilled 3 conditions, then I am be relieved of what? Assessee in default. In that case, what is the treatment? In the current year, I have to disallow 30%, 100% as the case may be, depending upon the residential status of the payee. And in the current year, I have to disallow. But in the next year, immediately, I will get the deduction under section 40A1 or 1A as the case may be. In the current year, I have to disallow. But in the immediately next year, I will get the deduction and I will not be called as assessee in default. Don't worry. Okay. Next one. If I receive a loan from a closely held company, so there is a closely held company in which I have 10% voting power or more. So if there is a closely held company in which I have 10% or more voting power means equity shares, and if I take a loan from such company, then that loan is deemed to be dividend under section 222E, but the deemed dividend cannot be more than the accumulated profits. So if the company is giving me loan of 10 lakh, but the accumulated profits of the company is only 7 lakh, then the deemed dividend will be only 7 lakh. It will not be 10 lakhs. I hope it is clear to all of you. So whenever the word closely held company will come and 10% voting power will come, the implication of 222E will apply. Next, if you purchase a motor vehicle and put to use between 23rd of August 2019 to 31st of March 2020. So if you purchase a motor vehicle between these 7-8 months, then you will get extra 15% depreciation. So normally you get 15, you will get 15 extra, therefore it will become 30. And in case if you are engaged in the business of running a motor vehicle on hire, if your business is of running a motor vehicle on hire, you will get 30 plus 15, that will become 45%. Okay, you will get extra 30%. But remember, if you are following 115BAA or BAB, you cannot get more than 40%. So in case of 115BAA and BAB, your maximum depreciation will be 40%. It will not be 45%. So the 45% will be applicable only in normal regime, not under 115BAA and BAB. I hope it is clear. So normally you will get 15 plus 15. Normally you will get 30 plus 15. But in 115BAA, BAB, you will get 15 plus 15. And 15 plus 30 will become only 40%, not 45. Okay, I hope it is clear to all of you. Next one, if you incur some expenses towards bringing some water to your factory, then it is allowed as a revenue expense under 37(1). Don't worry. Okay. Next, if you have incurred some expenses but invoice is not available, you have incurred the expense but you don't have the invoice, but you have indirect evidence of the purchase. You have indirect evidence like you have goods inward report. You don't have the invoice but you have indirect evidences like goods inward report. You have the online payment challan. You have the payment details, online payment proof. Then also it is allowed as a deduction. Don't worry. Okay. Next, if you incur some expense on ISO 9001 certificate, then that expenditure is not treated as an intangible asset. It is treated as a revenue expense. Therefore, claim that as a revenue expense. Don't claim that as an intangible asset. I hope it is clear to all of you. Okay. Next, if you make commission payment to any foreign agent, then you need to be very careful where the foreign agent has given us services. If he has given us services in India, then you have to deduct TDS, you have to pay TDS. But if his services are given outside India, then you are not supposed to deduct TDS. Do not deduct TDS, do not pay TDS, because in case of non-resident, we deduct TDS only if the income of the non-resident is accrued in India, it is taxable in India. If the non-resident commission agent, his services are restricted outside India, you are not supposed to deduct the TDS. For example, he has helped you to procure orders from outside India. He has helped you to procure what? Orders outside India. Then you do not have to deduct TDS. In that case, it will be allowed as deduction even without the TDS deduction. Okay. So I made a payment of 10 lakh rupees to a foreign agent who is giving me some services in United Kingdom. His services are restricted in United Kingdom. I am not supposed to deduct TDS. I can claim the expense as commission without what? Without deducting the TDS. I hope it is clear. Next, if you make some retirement benefit payments like to employees, generally if you make any payment to any person of more than 10,000 rupees in a day, you have to make by account pay check, account pay draft, ECS or such an electronic mode. But for retirement benefits, you can make the payment up to 50,000 in cash. The limit of 10,000 is not applicable for retirement benefit. The limit of 50,000 is applicable if you make any retirement benefit payment like gratuity payment, pension payment, VRS payment, retrenchment compensation payment to employees. Then you can pay up to 50,000 in cash. Okay. I hope it is clear to all of you. Next, whenever in the question it is written that you have received a dividend from domestic company. So if I have received dividend of 90,000 from domestic company, then how much is actually the income? The income is 1 lakh rupees. Why? Because if I have received 90,000 as dividend from domestic company, then that domestic company would have deducted 10% TDS on that. Therefore, actually my income is what? My income is 1 lakh rupees. So whenever the word received will come, you have to be very careful. It has to be after TDS. Therefore, I will gross up with 10% and then I will show. So I will reduce 90,000 from PGPP, but when I go to IFOS, I will show 1 lakh rupees as my income. I hope it is clear to all of you. Next one, if I earn some STCG from depreciable asset, okay, if I'm earning some STCG from plant, machinery, furniture, building, intangible asset under 115 BAB, under 115 BAB, STCG from depreciable asset is taxable at 15%, 10% surcharge and 4% cess. And STCG from non-depreciable asset under 115 BAB is taxable at 22%, 10% surcharge and 4% cess. Okay, be very careful. This will make, you'll make some mistakes here in the examination in 115 BAB. Next one, if you paid any amount for inauguration of a new branch, if you are opening a new branch, if you are paying some amount for inauguration of the new branch, it will be allowed as a deduction. Okay, I hope it is clear. Okay. Next adjustment, compensatory penalty is allowed as deduction. Generally, penalty are of two types. One is penal nature, one is compensatory. If there is any penal nature penalty, what is penal nature penalty? Penal nature penalty is for breaking a law. If you are breaking any law, those penalties are penal in nature, those are not allowed. But if you are breaking any contract, suppose I have committed you, I will send you the product by this date. Now, if I am not able to send you the product by a particular date, so I'm paying you some compensation for loss. That is compensatory penalty, and therefore that is what allowed as a reduction, because that is not for breaking any law. Okay, I hope it is clear to all of you. Next, voluntary retirement scheme payment is allowed as deduction under 35 DDA, but it is not allowed in one single shot. It is not allowed in 1 year, but it is allowed in 5 equal installment. So that will be allowed in 5 years. I hope it is clear. Okay. Next, if you make any payment for rural development under 35 CCA, it is not DDA, sorry for that, CCA. If you make any payment for rural development under section 35 CCA, then it is allowed as a deduction under normal regime also. And remember, it is even allowed under 115 BAA and BAB. There is no restriction to claim deduction of rural development payments under 35 CCA in 115 BAA and BAB. Even in 115 BAA and BAB, it is allowed as deduction. Okay. Next, penalty under GST, it is not allowed. penalty under income tax law, it is not allowed. Why? Both of them are penal in nature. Both of them are for breaking a law. Income tax interest not allowed because it is personal in nature. Because personal expense, income tax is personal, therefore interest of income tax is also personal, that is also not allowed. But GST interest, it is allowed because GST interest is not considered to be personal interest, it is considered to be a business interest, therefore it is allowed under the income tax law. Okay, I hope it is clear to all of you. Next one, if you make any payment for notified skill development, first of all, this is allowed as deduction under 35 CCD, notified skill development payment under PGBP. Secondly, this is only allowed for companies, not allowed for other assessees. Thirdly, only company and it is allowed under 35 CCD. Thirdly, it is not allowed under 115BAA and BAB. Under the new regime, under 115BAA and BAB, this deduction of 35 CCD is disallowed. Okay. Next, if there is a loss on destruction, suppose there is some plant and machinery, some building, some furniture which has destructed because of some reason, then because of fire, because of earthquake, then what is the treatment of that under the income tax law in a question? If there is any scrap received, first of all, this loss will not be allowed as deduction because it is a capital loss, therefore it cannot be allowed as deduction. Okay. Secondly, first of all, you have to disallow this loss. Secondly, if there is a data given in the question, then you have to reduce this scrap value of the block or insurance value from the block of asset. Okay, whatever is the scrap value or whatever is the insurance value, you have to reduce from the block of asset. So again, I am saying if there is some loss on destruction of asset, it is not allowed as a PGBP expense because it's a capital loss. It's not a revenue loss. Revenue losses are allowed under PGBP, not capital loss. But if there is any what scrap received or insurance amount received, you will reduce from the block of asset if it is given in the question. If data is not given, you have to ignore this adjustment. Most of the time they don't give the data. Expense on dividend income. Do you get any expense against dividend income? Only one expense is allowed, that is interest expense up to 20% of gross dividend. But that is also allowed to residents. For non-resident, even that is not allowed. For non-resident, dividend is directly taxable under 115A at gross amount at 20% without this deduction also. So if I am a resident, if I have invested in some company, if I earn some dividend, against that dividend, I can reduce my interest cost up to 20% of the dividend. But if I am a non-resident, I will not get that deduction also. It is flat taxable at 20%. I hope it is clear to all of you. Now, suppose if TDS not deducted or paid in the last year. In the last year, that is 20 to 23, if TDS is not deducted last year, or if TDS is not paid in the last year. So in the last year, the expenditure would have been disallowed, correct? But in the current year, if you have paid that TDS, if you have deducted the TDS, then the expenditure which got disallowed in the last year, should you get the deduction in the current year? Obviously, yes. You can claim the deduction in the current year because in the last year it was disallowed. In the current year, you are rectifying your mistake. So in the current year, if the assessee is the other person is the resident, you can claim 30% deduction. If the other person is non-resident, you can claim 100% deduction. I hope it is clear to all of you. Okay. Similarly, in the last year, you have purchased new plant and machinery. Okay. And in the last year, that plant and machinery was put to use for less than 180 days. And you are a manufacturer and power generating assessee. So in the last year, if you have purchased a machinery, new machinery, and you are a manufacturer, power generating assessee, and if it is put to use for less than 180 days, then in that case, last year you would have got only 50% of the additional depreciation, correct? Because there is a provision in additional depreciation that if you put to use the asset for less than 180 days, even the additional depreciation will be only 10% instead of 20%. So what about the balance 10%? The balance 10% you will claim in the current year, though there is no issue in that. Okay. So balance 10% you can claim in the current year. I hope it is clear. Next, if you incur some expenses on issue of debentures, convertible debentures, normal debenture, bond, loans, these are not for permanent period. Because these are not for permanent period, these has to be repaid some or the other day. Okay, these are not for lifetime, therefore these expenditures are not permanent, therefore it is allowed as a revenue expense. It is allowed. But if you incur any expense on issue of shares, that is permanent, or right shares, that is also permanent, that increase the permanent capital, even if it is not cleared by SEBI, it doesn't matter whether SEBI is giving clearance or not giving the clearance. If you incur any expense on issue of shares or right shares, even if the SEBI is giving you clearance or not giving you clearance, if your intention is to issue shares or right shares, then it is not allowed as a deduction because your intention is to increase what? The permanent capital of the company, therefore it is not allowed as a deduction. Next one, if you incur any expense on issue of bonus shares, then it is allowed. Why, sir? Bonus shares never increases your permanent capital. It is mere capitalization of reserves. Because of bonus shares, there is no fresh inflow of funds in your business. Therefore, the court has said that this will be considered to be a revenue expense. Expense incurred on issue of bonus shares is considered as a revenue expense. Therefore, it is not allowed. It is allowed as a deduction. Similarly, if you incur some expenses on increasing authorized capital, increasing the authorized capital will eventually lead to increase in the permanent capital of the company, and therefore again it is a capital expenditure. It is not allowed as a deduction. I hope it is clear to all of you. Next one, if I am a pharma company, and if you are a medical practitioner, and if I'm giving you some freebies, then that is not allowed as a deduction under section 37(1). That is bad in law, that is against law, therefore that will be disallowed under the income tax law. I hope it is clear to all of you. Similarly, if you give donation to Swachh Bharat Abhiyan, it is allowed under the normal regime, but under 115BAA and BAB, ATG deduction is not allowed. Therefore, even this will be not allowed under 115BAA and BAB. Similarly, if you give donation for Clean Ganga, now remember, donation to Clean Ganga is allowed under normal regime, but this is only allowed to residents, not to non-resident. Donation for Clean Ganga is not allowed to non-resident, it is only allowed to residents. But this is also not allowed under 115BAA and BAB, because in 115BAA and BAB, you don't get the deduction of ATG under any circumstance. Okay. Now, next one is a very intelligent adjustment. Pay attention, all of you. Brokerage paid to trader in securities. Okay. Brokerage paid, it is to trader in security, and TDS not deducted. So if you are making any payment of brokerage, it is not by trader, it is to trader. Brokerage paid to trader in securities. So if you are making any brokerage payment to trader in security, generally brokerage and commission TDS is covered under 194H. But 194H specifically excludes what? The brokerage on securities. Therefore, this will be allowed even though you have not deducted the TDS, because under 194H, you are not supposed to deduct TDS on such things. Okay. So if you buy any securities, that is, if you buy any shares from stock market, if you are paying any brokerage, you are not deducting TDS, it's okay. You are not supposed to deduct TDS on that under 194H, so it is allowed. But if you pay brokerage to whom? To trader in commodity, then you are liable to deduct TDS. There is no exemption under 194H for brokerage paid to commodity traders. Okay, it is only applicable for what? It is only applicable for security brokerage, not for commodity brokerage. Therefore, in this case, this will not be allowed as deduction. It will be disallowed under the income tax law. Okay. Next one, expenditure incurred on feasibility study where the project was abandoned. We were doing some feasibility study that whether to start this project or whether not to start this project, and unfortunately we were not able to start the project was abandoned. Don't worry, the government will allow you that as a deduction under the income tax law under 37(1). Next one, if you receive any industrial tariff concession from government, so any concession, any benefit, any duty drawback, any subsidy, grant, reimbursement, by whatever name called, if you receive from central government, state government, any body, agency, authority, then it is income under section 224(18). We have done this discussion in the chapter of what? In the chapter of PGBP. So if I receive any money in the form of money or kind, cash in kind, whatever I receive from central government, state government, body, agency, authority, then it is my income. I have to take that as a part of income. Okay. Check. Next point, if any business comes under 35AD, if any business comes under 35AD, you need to be very careful. Take 100% deduction of that expense of all capital expenditure, except land will not be allowed under 35AD, goodwill will not be allowed, even financial instrument will not be allowed. And one more thing, it is not mentioned here, you can write it down over there, that 35AD is not allowed as deduction under 115BAA and BAB. So if there is 115BAA and BAB SSE, they will not get the deduction of 35AD. Be very careful about it. Okay. Next one, GST is refunded by GST department. Say GST department has given me refund of 10 lakh rupees, out of which 7 lakh rupees I have paid to the consumers and 3 lakh rupees I have not paid back to the consumer. So whatever amount I have not paid back to the consumers, I have to add back to my net profit. Okay, because GST refund is ultimately belonging to the customer only now. It is not my money, it is customer's money. So whatever GST I have received, I have to give back to the customer. If I am not giving back to the customer, that is wrong. So whatever amount I am not giving back to the customer, I have to add back to PGBP. Next one, there is a closely held company. So if a closely held company issues shares at higher than FMV, okay, the FMV of the share is 30 rupees, but I am issuing at 100 rupees. So how much higher I am issuing? I am issuing 70 rupees higher. So that difference 70 rupees will be considered as income from other source of the company under section 56 to 7B. Check over here. Okay, so if the FMV is 30, I should issue at 30. If the FMV is 30, I am a closely held company. This provision is not applicable to widely held company. This provision is only applicable to closely held company. If the FMV is 30 and if I am issuing at 100, then 70 rupees will be considered as income from other source for the company. Check it please. Next one, in case of a closely held company, one more provision has to be checked. In case of a closely held company, I have to check that last year there on 31st March last year there was some loss, and in the current year there is a profit. So last year 31st March and this year 31st March, last year there is a loss, in the current year I want to set off the loss, then at least 51% of the shareholders have to be same. If the 51% of the shareholders are not same, I cannot carry forward and set off the loss in case of closely held company. This is the provision given under section 79. I hope it is clear to all of you. Okay, so as per section 79, in case of a closely held company, 51% of the shareholders on the last day of that year and last day of this year has to be same. Next one, if I'm paying excess amount to relative and I'm also paying in cash at the same time. Suppose you are my related party as per 40A subsection 2 and I'm paying you 1 lakh rupees in cash and the fair market value is 60,000 rupees. So how much excess I'm paying? 40,000. So in that case, I'm paying excess to my relative and in cash. So 48.2 is also applicable. 48.3 is also applicable. What should I apply first? First, you should apply 48.2. That is, first disallow the excess amount. And after that, check if the balance amount is more than 10,000. If the balance amount is more than 10,000, then disallow under 48.3 also. Okay. So first apply 10,000, and if the balance amount is more than 10,000, first apply 48.2, disallow the excess amount. If the balance amount is more than 10,000, then disallow the balance also. Okay. Next, if I am repairing some plant and machinery, some worn out plant and machinery, part of the worn out part of the plant and machinery is replaced, but that does not increase the capacity of the plant and machinery. The capacity remains same. Therefore, it is a revenue expense. It is allowed as a repair of plant and machinery under section 31. Therefore, that will be allowed as a repair under section 31. I hope it is clear to all of you. Suppose the employee of the business died in a business trip. One of our employee was in the business trip and he died away. So the company is paying some gratuity to his family. Okay. So company is paying some gratuity to his family. So therefore, whether it will be allowed as reduction? Yes, it will be allowed as reduction. It is out of what? Gratuitous attitude of the company. So because the employee died in a business trip, the company is paying some compensation to his family. Therefore, that will be allowed as a deduction. Don't worry. Next, capital expenditure of family planning. First of all, family planning expense is only allowed to company. It is not allowed to other assessees. Second, if it is a capital expenditure, then it will be allowed only 1/5 in 5 years. It cannot be directly allowed. It cannot be fully allowed in 1 year. The capital expenditure of family planning will be allowed in 5 equal installment. Next one, retrenchment compensation paid. Whether retrenchment compensation paid by the company to the employee is allowed, that depends upon whether the entire business is closed or a part of the business is closed. If when a unit is closed, not the entire business, or when one of the unit is closed, and for that purpose the company is retrenching the employees, then it is allowed as a reduction. But when the entire business is closed, check please, when the entire company is closed, then it is not allowed as a reduction. Be very careful. When a part of the business is closed and you are retrenching the employees, it is allowed as deduction. When the entire company is closed and you are retrenching the business and you are retrenching the employees, then the entire expenditure will be disallowed under income tax law. Next one, if you have taken a loan from some bank or cooperative bank or post office and you have taken a working capital loan, okay, say for raw material, and if that loan is what written off by the bank, then the principal amount will be considered as income under section 41(1). So if I have taken a loan of 10 lakh rupees, raw material loan of 10 lakh rupees for the purpose of my business from a bank, say ICICI Bank, then if the bank waives that loan, then that is a benefit for me. That is a remission or cessation of a trading liability, because the loan is for raw material. The loan is not for fixed asset. The loan is for raw material. It is a working capital loan. It is a remission of a trading liability. Therefore, it is an income. What about interest waived by the bank? Interest waived by the bank will not be taxable, because the outstanding interest earlier was not allowed as a deduction as per 43B. Because the interest was not allowed as a deduction, the remission of interest should also not be charged as an income in my hand. Okay, because the interest was not charged as a tax, interest was not allowed as a deduction on accrual basis, because I've taken the loan from bank now, so that is not allowed on accrual basis. Therefore, outstanding interest waived off should also not be allowed as what? Should also not be taxed as income. Okay, next one, if there's a mark to market loss in respect of unsettled derivative, in respect of which derivative? Very famous adjustment, lot of time it has come. Remember, mark to market loss is allowed as a deduction under 36 subsection 1 clause 18, but it is not allowed as a deduction if it is unsettled derivative. The derivative has to be settled derivative. In case of unsettled derivative, mark to market loss is not allowed as deduction. Okay, next one, benefit or perquisite given to employee. If I give any benefit or perquisite to my employee, okay, or if I give any benefit or perquisite for any business and profession, not for an employee, sorry, if I give any benefit or perquisite under any business and profession, not to employee, sorry, to any business and profession. If I give to employee, then I have to deduct TDS under 192. If I give to any business and profession, in business you have given me some benefit, perquisite. In business, you have given me some perquisite. I am making a payment to you for that benefit of perquisite. Okay, so in that case, I am supposed to deduct TDS under 194R. If you are a resident, if you are a non-resident, I will not deduct TDS under 194R. If you are non-resident, I will deduct TDS under 195. And if I don't deduct the TDS, the 30% expenditure will be disallowed under the income tax law. Okay, I hope it is clear to all of you. Next one, if I am making some deposit in bank. Why? Because I want some business. For business, I am making some deposit in the bank because I should get some business. For that purpose, I am making deposit in the bank. And in that process, I'm earning some interest. Then that interest will be chargeable under PGBP, and that interest will not be chargeable under IFOS. Because the ultimate objective of this interest is to get a business and not to earn interest. Therefore, interest received on margin money deposit with bank for the purpose of business. For business purpose, I'm depositing in bank, and for that purpose, I'm getting some interest that is chargeable under PGBP. Okay, I hope it is clear. Next one is a very famous adjustment. If you take a loan from any bank or financial institution, etc., okay, then interest, if it is not paid till the due date of filing of return, if the interest is not paid till the due date of filing of return, then it is not allowed as per 43B. It is what? Not allowed as per 43B. It will not be allowed as per 43B, because if you take any if you take any loan from a bank, financial institution, scheduled bank, cooperative bank, even certain notified NBFCs, then interest is allowed on a payment basis. You have to pay the interest by due date of filing of return. It is not allowed on accrual basis. Okay. Next one, in case of a construction company, if you are a construction company and if you have taken some retention money today, if you have taken some retention money from your client, in case of construction money, retention money taken today will be considered as what? Taxable today itself. It will be taxable as today itself as per percentage completion method. So if I am a construction company, I am taking some retention money from you today, it will be taxable today itself under what? Under percentage of completion method. Next one, if I have invested some money in a REIT, real estate investment property, okay, and real estate investment property has earned some STCG. What they have earned? They have earned some STCG on properties. Then it is exempt in the hands of investor. Investor is not liable to pay tax. The REIT will pay tax on that under MMR, at MMR. So if I have invested in REIT and REIT has sold some property, on that REIT has generated some STCG, so REIT will pay tax at MMR. I am not liable to pay tax on that. Okay. Next one, if I have invested in REIT and REIT has further invested in some properties from where the REIT has got rental income, so on that income REIT will not pay tax. I am liable to pay tax on the rental income. Check, taxable for invested under PGBP, not IFRS. One more important thing, whatever rental income will come from REIT to Mina, that is not taxable under HP, that is taxable under PGBP. Why? Because that is in the nature of business. What is the business of REIT? The business of REIT is to invest in real estate. From that they will earn rental income. That is the day-to-day business. So whatever income REIT is earning from investment in what? Investment in what? Properties. So that income will be taxable in my hand also under what? Under PGBP and not under HP. Next one, if I'm making a payment to a road transporter, to whom? To a road transporter who does not have more than 10 trucks, at any time during the previous year. Okay, so if I'm making some payment to a road transporter, he is giving a declaration that he does not have more than 10 trucks at any time during the previous year, and he also furnishes PAN to me, then there is no need to deduct TDS under 194C. There is a relaxation for deduction of TDS under what? 194C. I hope it is clear to all of you. Next one, compensation received due to interim order of the court. I hope you remember in capital gains we have done, if there is a compulsory acquisition of your property and you have filed a case in the court and court has passed an interim order and court has told the government that pay some compensation as a part of interim order. So remember, whatever compensation you will receive as a part of interim order, that is taxable in the year in which the final order is passed. Amount received in pursuance of an interim order is not taxed today. It will be taxed in the year in which the final order is passed by what? Passed by the court. Okay. Next one, 93rd point, I have already told you. 94th point, company received a bill of 31st March but omitted to record that in the books of account. So if you have purchased some goods but you omitted to record that particular thing, so it's very simple, record and reduce from the net profit. It is as simple as that. Okay, so if you fail to record it and reduce from the net profit. Next, commission paid to recovery agent. So if you are making some payment of commission to recovery agent, it is allowed if TDS is deducted. If you have deducted the TDS, it will be allowed. If you have not deducted the TDS, amount paid to the recovery agent will not be allowed as deduction. Next one, bonus of employees. See, there was a litigation going on between company and the employee, that how much bonus has to be paid. So till the time the litigation is going on, the company transferred that bonus amount to a particular trust, and the litigation got solved, and before the due date the company paid that amount to the employees before the due date of filing of return to the employees. So first the company transferred that amount to the trust, and then from trust it was paid to the employee before the due date of filing of return. Whether that shall be allowed as deduction, the answer is yes. So the Supreme Court in the case of Sassoon Chemicals Limited has held that because the payment is ultimately made to the employees before the due date of filing of return, therefore it shall be allowed as deduction. So it is allowed as a deduction, don't worry about it. Next one, check MSME implication for micro on small enterprise. You need to be very careful with this implication. So if the other person is a micro enterprise or small enterprise, you need to check the MSME implication as per 43B. What is the MSME implication? You need to check if there is an agreement for payment between both of them. If there is an agreement, then the payment has to be made within 45 days, or agreed period, whichever is earlier. If the agreed period is 40 days, you have to pay within 40 days. If the agreed period is 60 days, you have to pay within 45 days. Say, if there is no agreement for payment between both of them, then you have to make the payment within 15 days. So these are the due dates as per MSME. Now, if you pay as per the MSME due date, then the expenditure will be allowed on accrual basis. But if you don't pay as per the MSME due date, then the expenditure will be allowed in the year in which you make the payment. It will not be allowed on what accrual basis, it will be allowed on payment basis. Okay. Next point, if you receive any subsidy, grant, reimbursement from government or any person, okay, for fixed asset, the subsidy, grant, reimbursement, etc. is received for fixed asset, then it will be reduced from the actual cost of the asset. You will reduce from the actual cost of the asset as per explanation 10 to 43(1). Okay. Similarly, if you purchase any fixed asset and the payment is made by other than 4 modes, you are making the payment by cross check or bearer check or cash of more than 10,000 rupees to a person in a day, then you cannot take that as a part of actual cost. Therefore, if you don't take that as a part of actual cost, you will not get the normal depreciation, you will not get the additional depreciation also. Both will be disallowed to you. Okay. Next one, if there are some income or expenses from transfer of carbon credit, if you're transferring some carbon credit and if there is some income, if there is some expense, then that income is taxable at 10% flat under 115 BBG without deduction of any expense. No deduction of any expense will be allowed. Directly it will be taxable under 115 BBG. Okay. Similarly, if a company is paying some regularization fee for violation of law, the moment you violate any law, you name that anything, it is not allowed. It is penal in nature. For violating any law, if you say regularization fee or compounding fee or any kind of fee, then that is a penalty, and therefore that will not be allowed as deduction under section 37(1). Next, if you are supposed to pay some tax to the state government, some sales tax, some GST or some GST to the central government, but rather than paying that tax, you are giving a bank guarantee to the government, whether giving a bank guarantee amounts to actual payment, the answer is no. Therefore that will be what, not allowed as per 43B, and therefore it is what, it is disallowed under the income tax law, because giving a bank guarantee does not amount to actual payment. It is disallowed under the income tax law. Now at last I have put some tax rates over here. Be very careful. For foreign company, what is the tax rate? It is 40%, and surcharge is applicable. 2% surcharge if the total income is more than 1 crore but up to 10 crore, and 5% surcharge if the total income is more than 10 crore and up to 10 more than 10 crore, and cess of 4%. Always remember the implication of marginal relief which can come if you earn slightly more than the surcharge limit. If you earn slightly more than 1 crore, then there can be an implication of marginal relief also everywhere. Okay. Marginal relief is applicable to all of them. Similarly, in case of domestic company, if you are a normal company, then if your last to last year turnover, that is turnover of 21-22, is up to 400 crore, then your tax rate will be 25%. And if your turnover of 21-22 is greater than 400 crore, then your tax rate will be 30%. So in case of normal company, not 115 BAA and BAB company, your tax rate will depend upon the turnover of last to last year. If your total income is greater than 1 crore, surcharge of 7%. If your total income is greater than 10 crore, surcharge of 12% will be implied on you. Okay. Similarly, 115 BAA domestic company, the tax rate will be 22% flat 22% for all incomes. For special income, special rate will be applied. For 115 BAB, there are multiple tax rates. That is, if you are doing manufacturing or electricity business, then 15% tax rate. For other incomes, it is 22%, but without any deduction. As I have told you earlier also, house property income will be taxable flat at 22% without deduction of any expenses of house property. Special income will be taxed at special rates. STCG on depreciable asset, which I have told you earlier, also 15%. STCG on other assets, which I have told you again earlier, at 22%. Transfer pricing adjustments, domestic transfer pricing adjustments will be subject to 30% tax rate. And in 115 BAA and BAB, both section, you'll be chargeable with surcharge of flat 10% irrespective of income. Surcharge of 10% will always be applicable, and cess of 4% will always be applicable, always applicable. But for normal companies, surcharge is applicable subject to if the income crosses 1 crore rupees. Last but not least, if the question asks in the examination that compute tax liability, then you should compute total income and the tax. Okay. But if the question asks compute tax payable, then you should compute total income, tax, and after deducting from that, you should deduct the TDS and TCS credit, and you should deduct the advance tax credit. Then you will get the tax which is payable by the assessee. So if they ask payable, then reduce the TDS, advance tax, etc., TCS. And if they ask only tax liability, then don't reduce all those things, just compute the tax and leave it. Okay. So these are some of the adjustments which may be relevant for you all for your CA final exams of November 2024. And in the very first question, these will help you to great extent. Yes, these adjustments might also help you in the other part of the paper also, because there are many concepts which we have covered directly or indirectly over here, with respect to business and profession, with respect to capital gains, with respect to IFOS, with respect to house property, with respect to chapter 6A, with respect to special tax rates, with respect to tax rates, with respect to 115 BAA, BAB, set off, carry forward, lot of different concepts we have tried to cover over here. So I hope you all have enjoyed this. If you have enjoyed this, please do share this with your friends in South India mainly, because mainly the English students are generally from the southern part of India. I'm not saying that the other part of India does not listen to English lectures. They also listen to English lectures these days. They also prefer English lectures over Hindi lectures. But mainly it is religiously followed in the southern part of India. So it takes a lot of efforts from my side to record the same lectures 2 times. I don't think so any other faculty across the country do this, that they record the same lecture twice, first in Hindi, then English, Hindi, English, Hindi, English. I have tried my best to record most of the lectures in English, which I have done it in Hindi. I may not have recorded all of them, but at least most of the important ones I have done it. So I request you all to share it with your friends, and I also request you all to go through this video 2 to 3 times. And thirdly, I request that you all should share your views below in the form of comment. Your every comment motivates me 100% more than the previous lecture to make more content for you all. Till then, take care all of you. Bye all of you. In case of any query, you can comment me below. I will try to address you all. Bye all of you. Take care.